Hello everybody, going through my Sunday analysis for week commencing 27th of October 2019. I hope you all take some value from it and get to see basically my process of like how I obviously annotate the pairs that I'm going through for the next week. Alongside this video, in the description there's going to be a link to my Evernote document, which basically goes through all the screenshots and narratives to support what pairs I'm looking at for the next week, so check that out. Also, these wild cards at the bottom, Kiwi card, Euro card, Dollar card and Aussie dollar, I won't be covering them in this video because these pairs simply need a bit more development, and if you want to see some breakdowns of them, maybe check out my Instagram and I'll probably do that sometime later this week. But yeah, basically I'm going to be covering the pairs I'm going through, my top 6, the dollar index, these are my top 6 right here. I'm going to be going through the fundamental analysis that's going to impact the pairs that we're looking at, and yeah, I'll show you the Evernote document at the end. If this is something you want to see more regularly, just comment down below, and yeah, let's just get right into it now. Of fundamental drivers that are going to impact the pairs that we're looking at. As you can see, I've filtered it on Forex Factory, which you just click this little funnel right here and just select the orange and the red expected impact news, and basically that'll filter all the ones that are probably going to affect the ones you're looking at. Obviously, in my strategy, news simply creates volatility and not direction, because direction is pre-decided by the market structure. But I always make it my job to look at the fundamental basically impact and see if that's going to create volatility within the pairs that I'm looking to trade. So, for example, if I were going to take a position on Aussie dollar around Tuesday, Wednesday time, I know there's a lot of news coming out for both pairs, and that could really impact my entrances and management of the trade. So what I do is, instead of looking into each one, I literally don't care if it's FOMC, I don't care if it's non-farm payroll. I literally, every morning in my journal, I'll check Forex Factory and I'll write down which pairs are going to be affected at what times, and then I know that when I'm scoping out trades, I'm looking for trades that around these times I probably want to hold off a bit. And just know that basically the volatility can spike the charts, spike price, and basically you can be tagged in and then stopped out within a matter of seconds. It does happen time and time again, so what I would say is check out Forex Factory. I'll put a link down in the description below. Check which pairs affect you, and yeah, let's get into the dollar index now. So basically I'm going to be doing top-down analysis on every single pair that I'm looking at, starting with the dollar index and working through my top 6. So what are we looking at here? We're looking at the weekly time frames. We could clearly see that this is like an ascending pattern, so we're looking for more downside on this pair. People did get involved with some great trades on this dollar weakness. The dollar index is simply a representation of the dollar and the strength of the dollar compared to all major pairs. So basically, I was looking at this. We've had this big impulsive commitment on the weekly. We've really had some downside, and now we're looking to see if we can either break this structure and correct and then commit to the 90% rule, or we're looking to either come down and come and test the highs again. So based off that, we'll dig deep into the daily, and what we can see here is with impulse down, it's just the same thing, but obviously each candle represents a day as opposed to a week. What we can see here is with impulse down, this is a correction, so I'm anticipating this impulsive leg to the downside. It's also important that we consider possibilities and the probabilities, and the fact that this can come up and test the highs again. Because if we look at where we are at the, if we put a ray line on here, this is at like the previous lows, so we could be moving to the upside and testing the highs again. Breaking down to the 4 hourly, it's starting to become more clear now that this is a bear flag, and we've got a 1, 2, 3 touch pattern. So this is completion, and the pattern plays out to the downside. So we've come from this impulse, we've got this bear flag, 1, 2, 3, and we'll be looking for that break. So then we look on the hourly for our entries and how we're going to get involved, and this is what we see. So quite clearly, we've got that 1, 2, 3. You can see even better on the hourly. 1, 2, This is the third touch. We've broken this descending trend line or descending channel, as you say, but it's not the fact that we've broken it. That doesn't mean that we're heading to the upside. It's the fact that we've broken it and we're still in this sort of corrective price action right here. So this is still very valid to come to the downside. As you can see, we've got impulse, a correction, and then the impulse to the upside. So that forms an ascending channel within this bear flag to the downside. So that's perfect. What else could happen though? We could see dollar weakness to start with, and we could come down, but this price could be really corrective. Now, if that happens, this potentially could be a running channel, and this could move to the upside. So it's just, you've got to be really aware that it's okay to get involved with trades and anticipate this dollar weakness coming into next week, but it's the fact that, right, we're getting in and then we're going to be a bit more aggressive with management because of how we get here. If price starts to move down correctively away from this third touch, then we know we're going to be in for that movement to the upside. But if price starts to like impulse and we get a correction here, then we impulse, we know that clearly we've broken this structure and we're heading to break and potentially as a minimum go for and target this little 9% rule right here. If not, come down and test the lows of this structure. I think that's about it for DXY. Oh yeah, we can go through this. So basically, I've got on here a previous lower high within this descending channel, and what can happen is if we get this running channel, this can pop up and we can come back and test this, get an ascending channel, and then commit to the move. But yeah, we'll deal with that as it comes to that. Basically, we're looking at where we are now. We're on that third touch. We're looking for this more downside movement. We can also get a running channel and pop to the upside. That's the dollar index, guys. Gold to the US dollar. This is the first pair on my actual watch list. So let's break this one down. I'm going to start on the weekly again. We can clearly see that in terms of where we are in structure, since like 2013, we've obviously been in these highs. We've come from this impulsive leg to the downside. This is a correction, so anticipating this move to the downside on gold. So what we're going to do about that, we're going to break it down into the individual weekly candle that we're looking at. So last week on the 14th of October we had this doji. We've now started to move to the upside, and then we've sort of tested the previous like daily high, and to me we've kept this lower high, well, higher high, lower high, lower high, double top. So I'm going to be looking for more downside on this pair this week to potentially make a lower low on here to continue this descending sort of structure that we've got going on right here. If we take a look at this on the daily, this is where it gets really nice, because what we can see here is it looks more clear. We were getting this ascending nature. We have this sort of scooping, arcing nature right there. We've got a really nice candlestick there. It's like a doji, and it shows that we've rejected that key level of sort of like resistance, if that's what you want to call it. But yeah, it's previous high, so we've rejected that area right there. So we break that down onto the 4 hourly. You can see that basically we've got a massive rejection. Now I failed to get involved with that trade right there. It does fit my plan, but obviously emotions took over on that one. I didn't get involved. But it's not to worry, because you can still get involved on the other trades. So basically, if we have a look at where we are right now, we can basically see that on the 4 hourly we've got this big rejection. Break it down into the hourly. So what am I looking for in terms of like the possible and probable, and how am I going to get involved with this trade to the downside? So obviously I'm selling gold this week, guys, and what are the different variations of like price and how we can do that. So I'm sort of looking for, we can get like a steep correction to test the back of this trend line and then pop to the downside. Now if this is exactly what happens, I will be getting involved. Nice ascending nature, corrective price within that. What I'll be doing is I'll be entering via a risk entry right there. I'll probably try to get quite tight, about 350 give or take, and then I'll be targeting the lows of this ascending for about 6.5%. The beginning of the correction for 9.8, and then to create new lows I'll be looking at around 18% just on that one trade. And now on the way down there's going to be plenty of scalings, so literally, it's just about staying on the ball and trying to get involved with that trade right there. Pardon me. Now, different variation of this trade that I'll be looking for. I'll be looking for a tighter flag as such. So as to move down here, maybe with corrective nature like this. So that is awful. Let me do that again. We get some corrective nature as such, and then move to the upside. Maybe bounce off this double top right there. So if we draw it in with a ray line, we could probably reject off that double top right there, or just break through and catch people on the wrong side of the market, and then drop. And then this is the middle section right here. Draw it in with the trend tool right there. This is the middle section, so we've got impulse, correction, impulse. That forms like an ascending sort of structure, and then we just drop to the downside because the higher time frame will take precedence always. And yeah, that's basically how I'm going to get involved with that. If, for instance, none of them materialise, and when the market opens, say we simply just drop out, because that's literally, it's so possible. If the market just drops out, I will come back on Monday morning or Monday evening, reanalyze the charts, see where I am, and see if I can still potentially get involved. If not, it's not even a bother. There's so many other pairs. Like if we look on this watch list, there's so many other opportunities that I can get involved with that this won't phase me. I'm not that phased that I didn't manage to get involved with this position right here, which right now would be running at literally 2%. Obviously, you'd be in that position looking for these bigger percentage moves. But yeah, guys, that's gold for next week. Euro dollar, guys. So on the weekly time frames, this is inversely correlated to the DXY. Literally, if you have a look at the DXY and then click, if you're on Windows, Alt and I for inverse, this looks exactly like the DXY chart. So we can say that inversely correlated, but let's flip it back to how it really is. That's a cool little thing. If you didn't know, you can inverse the charts with Alt and I. But yeah, let's have a little look at where we are in terms of the weekly structure. So we've impulsed away from this falling wedge sort of descending channel right here. So we've got 1, 2, third touch, impulsed away, and now we're looking for a continuation to hopefully carry us through and break, and then target these 90% rule. Target the 90% rule on the higher time frames. So we're looking basically for some long-term, long positions on euro dollar, as obviously we can be taking highs of 1.18157. And currently look where we are, so there's plenty of time to get involved and plenty of obviously time to like, there's no need to rush basically. But there's also something else we can consider. There's no reason why this can't come back and then bounce off there and retest the lows again. So let's break it down into the daily time frame. As you can see, I've got this trend line drawn in. We've got a 1, 2, and we're currently at the third touch. Now the candlesticks are quite bearish and quite corrective. So what I'm looking for is either a bounce from here to carry us through, or we're going to break through and then form a bigger correction. This gets more clear when you break it down into the lower time frames, such as a 4 hourly and then 1 hourly. So if we look at this, this is a bull flag to move higher, and we've got 1, 2, and then this area is like the third. We've just pierced it, and it looks as though we've got a doji here, which shows that potentially momentum is slowing down, and this could carry us through. So yeah, what have we got here? We've got 1, 2. From the second touch, we impulse down. This is the correction, and then this is the impulse following the correction. Now that in itself, if you draw that out like this, impulse, correction, impulse, that creates a descending channel. Like even if it's not very clear, you can sort of see how it does create that descending channel, which is a reversal to move to the upside. So looking at it on the hourly, it is a bit more clear. Now we are at these areas, we're getting some corrections and we're getting some retraces, so it's just going to be good to see how the market opens and see what we get. I've got this ray line drawn in at the bottom here for potentially get some nature like this, and then pop to the upside with a descending channel as such. And then what I'll be doing is I'll be looking to get involved like this with a nice 18 pip stop, targeting previous highs, the beginning of the correction, 6%, 7%, and then if we look at where we could be going, around 8.6%, even higher. So yeah, that's one of the position, like one of the probabilities. Now another possibility that we could get is this purely just retraces from where we are. Like we said on the DXY, this could literally just go and impulse as soon as the market opens. In which case, if we break this sort of descending trend line, I'll be looking for a flag to form, because the first flag after the impulse is the highest probability, and then I'll be looking to take this on a reduced risk entry, setting my stops just below the structure, probably not 13 pip stop, probably about 16, and then obviously doing the same. The percentage is less, but once we see that impulse and the first correction, it's a higher probability that we're going to play out to the upside. So you get less percentage, but it's sort of like, it's not guaranteed, but there's a higher probability that that's what's going to happen. So yeah guys, that's what I'm looking at for euro dollar. Looking at pound dollar now in the top 6, we're on the weekly time frames. So let's sort of zoom out and see what the overall bigger structure is saying. If we look at this, we're in this like this is the structure that we're contained within, and then potentially like long term we could be breaking through them, making some big highs, and then this could be the start of a bigger move upwards. Now what I mean by that is, if we look down at where we are at the minute, we have impulsed. This is a correction, so we're looking for this impulse to at least get to the 19% rule, which is right here, minimum, if not break this bigger structure and potentially start off. This could be the start of some amazing new highs for pound dollar. Now there's something else we need to consider, is that this could break, get the 90% rule, and then fully retrace, test these lows and come back up. But what we need to do is look at the most recent bit of price action, which is what we're in now, and this is how we're going to capitalize. Because remember guys, you're making profits as a day trader. You don't need to look that big. It's good to know because it helps you like form your bias, etc., and it gives you that that natural instinct as to what is like a high probability setup. But yeah, let's break it down on the daily. We're looking for more upside on pound dollar. So obviously, as you can see, if we just extend this trend line out, we've fully broken that through. We've broken through that impulsively last week, and then this week we've literally just been correcting to the downside. So a few people managed to sort of get involved with these sells and then take that profit. But I thought I'll wait, because I like to trade in line with the higher time frames, just because of the like potential that you can reach with it. And usually that's where you bank your percentage. Like you can get 10% returns just from that. Whereas if you're trading within a corrective phase, you don't tend to get as much. But it's just like your style of trading. Are you more aggressive or are you more conservative? And I like to think that I'm more conservative. But yeah, 4 hourly, you can see that this is a bull flag to move higher. So we've got a 1, 2, and this is a 1, 2. So what we're looking for this third touch of this bull flag, or failing that, we're looking for the third touch of this descending that I've got drawn in. So this is where you've got a separate pattern sort of. We've got 1, 2, and we could touch here, which means basically we just need to let it come down and do its thing, let it come down with descending corrective nature. So what I'll be doing is looking at where we are now. We're getting this sort of descending formation, and when we get to down here, I'll be looking for reversals off here to enter to the upside. What will that really look like, and what will I use as confluence to get involved with them trades? Now if we look at what we've come from, we've got this big impulsive leg down. This is the correction, and then we're looking to get that last impulsive little leg to the downside, and then I'll be looking for a bit of descending corrective nature off this double bottom area. We could take that to the upside. Now if we just draw in some trend lines around that, we can see that will form a nice descending, and then what you can do is you can enter with a risk entry right there for about 19 pips, and then obviously you'll be taking that through the break, or minimum these highs, or taking it through like to the start of the correction for 11%. If you take a 1% loss on that, and what happens is price does correctively move down, but it just continues and continues, and you get taken out for 1%. Don't worry, because what that means is we'll be in a position like this. We're coming down and down and down like this. That's really messy. Basically, we're coming down and testing these lows and popping off from there. So you can take a 1% loss, but then this will go on to bank 10%. So just stay on the ball with it and know what you're looking for. And then you can just do the same thing. And it with risk entry, some people would even it with a reduced risk, but I'd like to play that with a reduced risk. Tighter stop, 22, and then look at what you've got for scope, 9%. So yeah, that's what I'm looking for basically, this bull flag movement to the upside. That's just changed to the DXY. Let's flick it back on to pound dollar. But yeah, this is the sort of thing I'm looking for, guys. So yeah, that's pound dollar. Pound yen. So basically I'm looking at this as a little bit of upside just to touch this trend line, and then potentially we could be moving to the downside, or we could break and form a bigger correction. So let's break it down to day. Oh wait, no, sorry. Let's have a look at the weekly candlestick that we just had. So as you can see, we've had some big impulsive moves on pound yen. This is a big impulse, so we can see little corrections within there. So I believe that this is going to be a little correction to potentially take this to the upside. So let's have a little look on the daily time frame, and you can just see it a bit more clearly now. This is the correction that we're looking at. I believe this correction could either be really corrective and form some ascending nature, and that's why I'm taking the upside movement. But as you can see, we closed with a little doji candle last week, which shows indecision, which is why I believe if you look on the lower time frames, this is like a descending sort of price nature, and it's to pop to the upside. So let's take a little look on the 4 hourly. Now, there's some variations as to how I'm going to get involved with this trade. If I do get involved with this trade, I'm going to show you how I'm going to. So this is the 4 hourly. You can clearly see this is a bull flag, or this is the start of a downtrend. It's just completely dependent on how it is seen and how the market shows us and approaches these key areas of high value. So I've just drawn on there. We've got 1, 2. That's potentially a third touch of this trend line, or just 2 touches. And we've got 1, 2 touches on this lower descending sort of trend line. So if we look at where we are on the hourly, this is where we can start to see where we're going to get involved and what it really is. So we've got an impulse to the downside. This is in that correction. So minimum, we're looking for this downside movement basically, and then it's these areas down here and here where I'll be expecting or looking for some sort of reversal. Now, if that doesn't happen, which it doesn't have to happen, what we can get is just a complete break, a correction, and then we're in a downtrend. And this essentially hasn't reached these outer structures like we've anticipated, and it's just dropping off from where we are now, which would make sense when you combine stuff like that double top. This is just the start of the downtrend like this. But obviously it's completely dependent on what we see and what happens. So yeah, how am I going to get involved with this trade? Basically the bigger move is the upside, but I might get involved with the downside. It just depends what we get. So we've got this impulse, this is a correction. Now a higher probability correction will have 1, 2, and then this third touch over here. So I'll be looking at this as a impulse, a correction, impulse, some nice ascending nature, and then the downside to at least these previous lows, if not breaking the lows, and then getting upside. So there's a couple of ways I might approach this. It just completely depends. If we get this ascending corrective price nature as we approach this third touch, for sure I'm going to be getting involved with this sell position, because if you look at the percentage, you can get like 5, let's be conservative, 22, 4.65% on there. I don't know how to raise my voice. So yeah, we're looking at that. But then at the same time, we couldn't get involved with this downside movement and then straight away flip the bias. Look at this, get a nice 24 pip stop and then take this to the upside. So you could be looking at a 5% and then straight away a 7.26%. Now there's other ways that this could be approached. We don't actually have to get this third touch on this correction, so we don't have to get a 1, 2, 3, we can just literally get a 1, 2, this becomes a correction, and then we literally just drop to the downside based on this and then pop up, or we just get descending nature and then pop up, or we could get a complete break, a correction, and then a break again. So there's so many different possibilities and so many different ways you can get involved. I think personally this will be a nice trade from down here to at least the start of the correction, 9%. But then at the same time, if we get up here, that's a really high probability area, and that is where I'll be looking to get involved, sort of something like that. Not with an 11.5 pip stop on pound yen, because that's literally asking for a 1% loss. But yeah, like I say, it depends on what the market's giving us, but that's my analysis, guys. Literally sort of like this or like this, one of the two. I'm not bothered what we get. Either way, I'll probably capitalise on that. But yeah, that's pound yen, guys. So yen, guys, so I'm looking at this on the weekly time frame now. Just going to do a bit of top-down analysis on this as well. I'm actually looking for longs on this pair. And basically, yeah, let's look at how we can get involved. So on the weekly time frames, you can clearly see that last week we shut with a bearish candlestick, and last week we broke out of this sort of descending trend line here. We broke out, and then last week we had a bearish candlestick. Now, know that this is a weekly time frame, and basically, when you go to daily, this represents the exact same thing, apart from each candlestick is just obviously a day, whereas before it were a week. So you can see that this whole continuation here is actually that bear flag. That is the worst drawing ever, but basically, yeah, you can make out that that's the bear flag. So this is a continuation, and I'm looking for this to move to the upside. So if we take a little look on the 4 hourly, we'll be able to see this bull flag a little bit more clearly, and you can sort of see the areas of high probability. Now the areas of high probability are here and here, because this is the third touch, and on a 1, 2, 3 that confirms the completion of the bull flag to move higher. And also we have an override, which is we can reverse off the double bottom within this pattern. So we've obviously got this, and instead of the third touch, what you're going to get is you could get a reversal off there. And it's important to consider both potential possibility and the probabilities in order to like be best prepared, because you never really know what it's going to give you. But yeah, so if we reverse off this double bottom within the pattern, we'd sort of get something similar to this. So you can see how we've got a bullish engulfing straight off the double bottom right there. That'd be a good area for an entrance to take to the upside. But also know that this could just be part of a bigger continuation to break lower, and you could take a minus 1% loss, but that's completely fine, because if you actually take the 1% loss and this comes into a bigger correction, it comes down, and it forms a descending at this area. All you do is you just do the exact same thing as you did before. You get involved and look at taking this down here, and you get in with a tight stop around 18 pips, and look at what you've got to the upside. You've got around 7.5%, so it's very worth taking a minus 1% loss, knowing full well what price can do and what areas you've got to get involved with. So yeah, that's what I'm looking for. This bull flag, 1, 2, 3, either entrance straight off of the double bottom, and if I'm going to get into something like that, I'll be looking at sort of something like this, if I'm going to do that, or I'll be getting in at these areas down here. Another important thing to know is that if we go down and create a lower low, and then we obviously get involved with this buy, but we don't actually create and break a new high, this could be the start of a downtrend, because if you actually look, we've got a high high, lower high. If we get a lower high and then another lower low, this is clearly the start of like a descend, and that's when we know the bias is flipped. And we don't actually necessarily have to come and reach a 90% rule just yet. We could come back down, start descending, come all the way down, test these out structures, and then get involved with a big buy afterwards. So it's just being able to understand every potential possibility that price action can offer you and how you're going to capitalise. So like I just said, I literally will get involved with this buy if we come down like this, but knowing that I'm going to trail my stops when we start getting to these areas because of that potential for the downside. That's what you forecast for. You don't just forecast and go, right, euro yen, I'm off to the upside, and then you change the next pair. You literally draw in what potential price action can give you. You look exactly how you're going to get involved, how you're going to manage it, what size stop loss you're going to use. Is it a risk entry? Is it a reduced risk entry? What pattern are you within? What's the higher time frame showing you? All these things need taken into consideration. Now, it's easy for me to just sit there and talk to you, but I've been doing this for a year, guys, so my forecasting process literally doesn't take me very long. Like, I can literally know that, right, what I'm looking for. These are the areas of high probability. Draw in what would happen, and you'll know that through backtesting. And then basically, in a live market, you just evolve with that. Like, if the market changes, for example, it definitely can. If we don't get anything like a descending, and we literally get an impulse and it all goes mental, I will sit down on Monday night, do my forecasting, and I will evolve the trend lines and see what the market's telling me, and then reanalyze. And it's not as if I'm going to be offended that my analysis was wrong. It's the fact that you just take a message from the market and you literally just move on. And euro pound, and this is what I'm looking for. Basically on here, as I said, guys, the wildcards that I've got on my watch list, they need more development before I'll be looking to get involved. But if you do want to see a breakdown of them, like maybe midweek, drop a comment down below, give me a message on Instagram and let me know what you want to see. But yeah, let's get into this. And if you made it this far in the video, thank you. definitely helps the channel. Give it a subscribe and turn that bell on for notifications, because I'm going to be trying to give away as much free value as possible in terms of my processes and technical analysis. This obviously is a combination of technical analysis and the processes that, like, obviously I go through, because you'll be able to take away obviously little nuggets of information such as what I'm looking at in the markets, but also how I'm recording it, like such as the Evernote document that I'm going to give you. You'll be able to see how I record my forecasting, and yeah, you can basically just see like how I set my trading view up, and basically all that good stuff that makes a trader. So yeah, let's go through this. On the weekly time frame, we can clearly see that we've got this doji pattern here, which shows market indecision. And like I said earlier, guys, it took me a long time to get this, like my head around it. But that on the higher time frame, if we break that down to the daily, that literally just makes a correction, because the daily, each one represents a day, and the other ones represent a week. So let's have a look. This is obviously a correction. We're starting like a corrective phase now. If we look at this trend line I've got drawn in, we've got a 1, 2, and then we're looking for this third touch. Now, obviously, because we're looking for that third touch, you could say that where we are now, we're looking for upside on euro pound to test this trend line again. So if we break that onto the 4-hourly time frame, I've got this structure drawn in. It's a bit more clean, it always is when you go into lower time frames, but this is the structure that I've got drawn in. And obviously you can see we've got a 1, 2 and a 1, 2 touch on there. So this is going to be ready pretty soon. Now let's have a look at actually how we're going to get involved and what direction. Obviously we're looking for the upside on here, but it's important to consider the probable and the possible, like I always say. So this to me is quite corrective. What we could be seeing is a correction and an impulse to the upside. Now obviously this could confuse some people, but this could actually be a running channel, and this could impulse right the way up. So if we look at this correction that we're drawing here and then we impulse up, this could come and test these trend lines right here. You could get involved with a risk entry like so and have a nice 25 pip stop to the upside, 9.2%. So I will be getting involved with that upside movement if we get that corrective nature. And listen guys, it's so important that we get that corrective nature before we enter, because what happens if we move and break like impulsively and get correction here, this could be coming to the downside. Now that is very possible. This is what I'm saying, the possible and the probable. We've got a 1, 2 impulse, correction. This can just impulse and break, because if you actually look at what this pattern is, we've come from a downside, we're going like this is the correction, and that would be the anticipated impulse. Obviously the high time frame does show that, like on the weekly, that we are going to be heading to the downside. But if we look at where we are in terms of like the structure, we are quite low. If you have a look right there, we're quite low, we've impulsed, so we could be heading to the upside. That's my thought process behind that. Now something else that we could get involved with this long trade right here. could move to the upside, get some ascending nature around here and corrective, at which point I'd lock in profit exactly where this ray line is, and then we could drop from there. In which case I'll probably take a little bit of profit. In fact, I'd also take the sell, to be quite honest, if we're at this third touch, and I'd probably take like around 2% on there. And then if you look at this to a 20 pip stop, that's 6.4%, and obviously that could just go through. So it's about being neutral, guys, and seeing like what's best like for you, how you're going to capitalize on every move, on every possible move that you can, without obviously trading against your plan, etc. But yeah, that's sort of the thing that I'm looking for. And yeah, that's pretty much everything, to be honest. Yeah.
So that's the end of the video, guys. If you enjoyed it, leave a like, comment and subscribe. Turn that notification bell on for more videos. And yeah, generally, thanks for supporting it. Check the links in the description. Bye.